Good morning, my name is Jose Cardenas. Today we have a practical yet insightful video that we're covering. And we're gonna talk about the year-end checklist that you should have started yesterday. And before we get into it, I am going to assume that you already have an accounting software. And even if your books are not up to date, that's totally okay. The video is gonna be helpful and valuable to you. And if you don't have an accounting software in place as of yet, do get it sorted out as soon as possible, because as time goes by, it's only going to get more expensive for you to have a tax professional, a qualified professional, to go back and clean it up for you. Now, we're going to be covering mainly aspects of bookkeeping. Why? Because it's so important. And unfortunately, most people only turn their heads towards the tax filing and not the bookkeeping. Yet, without the bookkeeping, you can't have the tax filing. And if the bookkeeping is wrong, your tax filing is wrong. Because in bookkeeping, that's where it all starts. That's where tax compliance starts. That's where tax planning starts. So you have to have your books right. With that said, let's go ahead, let's dive in. I'm gonna break it into 5 items for you. And the first item, we're gonna talk about banks and credit card reconciliations. Very important. Ideally, you want it done every single month. This is how you know if whatever it is that you have in your accounting software is complete. Everything is in there by you comparing every single transaction that's in the accounting software with the statement that you get from the institution every month. Number 2 is going back and making sure that all of your money out transactions in your accounting software are correctly categorized between business expenses and owner draws. Because last time I checked, owner draws are not deductible, okay? Very easy mistake that I often see taking place. And you're always taxed on the bottom line of your profits, whether you take the money out or you don't. So make sure you keep that in mind. Number 3 is checking for open invoices and open bills. When I check for open invoices, I'm checking for invoices that are incorrectly being left out open. You could have probably duplicated an income line item, right? Because maybe the payment came through the bank, the deposit came through, you recorded the income, and then when you created the invoice, you created another income item, because you don't want to have more income being reported on your tax return than what you actually made, right? So that's something to keep in mind. And then turning towards the open bills balance, I'm looking for expenses that you could pay towards year end that may apply for the following year. Let's say you have an open bill that's payable in January, and right now, as of the moment of this video, it's October. Let's say it's payable in January, and it covers January through December of 2026. And this is just for example purposes. I would probably suggest you paying that bill by December so that you get the tax deduction this year in 2025, and you don't need to wait to take that tax deduction for when it's time to file your 2026 tax return. And then lastly, it's as simple as running a profit and loss statement and a balance sheet statement and just looking for trends, identify the trends and look for any anomalies. And when I do this kind of overview review, when I run the profit and loss statement, for example, I am looking for large expenditures, because that is a symptom. Not necessarily means that it must be, but it is a symptom that that expense transaction should be capitalized. So I always go down and make sure that that is not the case, or if it is the case, go ahead and correct it. And when I look at the balance sheet statement, I am looking for 2 things. I am looking for just any balance in the opening balance equity account. You should have no balance in that account. And then second, I am looking for just any negative balance, because you shouldn't, in general terms, most of the time, you shouldn't have any negative balance in the balance sheet. Very, very few instances where you would. So this is a very easy win for you to look for when reviewing your balance sheet account. Nothing should be negative. And that wraps up the 5 items of the year-end checklist. Make sure you go through them with patience and ample time. I kid you not, every time I onboard a new client, I always find something in their books. Make sure that all of your business expenses that you have recorded on your books as a business expense is a legitimate tax deduction that you're able to take on the tax return, okay? That is why you need qualified hands dealing with your books, so that you know, so that in the books you record something that as a tax deduction and it really is a tax deduction. And that concludes this video. Hopefully you liked it. Hopefully you found it valuable. Make sure you smash the like button. Let me know if you have any questions in the comments below. I post every Friday at 11 a.m. Eastern time. And with that said, I'll see you on the next one.